welcome to Cafe Mutual YouTube channel. Friends, mid-cap indices went up by almost 90% in a matter of a year. So now the question is, do mid-cap funds offer opportunity to invest more? Or is it time to redeem from mid-cap funds and maybe rebalance the portfolio? So to take us through the mid-cap segment, we have with us Manish Gunwani, CIO Equity Nippon India Mutual Fund. So Manish has over 2 decades of experience in fund management and wealth creation. He is an IITian and has completed PG from IIM Bangalore. Welcome, Manish.
Hi.
So Manish, so what is your view on mid-cap segment? So what are the key determinants for markets here on?
So the mid-cap segment is basically a very diverse segment. Unlike the large cap segment where maybe aggregate valuation average makes sense, here relatively the diversity of companies is so high that it is very difficult to talk in aggregate terms that aggregate P average or aggregate price to book average is this. But in India, I think the mid cap segment is poised well from a medium to long term view. The reason I say that is while obviously the index has done well, a lot of mid caps have done well, valuations are expensive, and there could always be short term corrections. But the interesting part is, as we all know, I think there are two or three big mega trends that are happening globally. One is that technology is becoming all pervasive, and not only in pure technology fields, but even in banking, healthcare, retailing, the role of technology is increasing a lot. Now, in that kind of disruption or changing world, you will clearly see a lot of new business models. And typically, a lot of these new business models begin in the mid and small cap space because initially, obviously, a lot of these companies are very small. So that's the first point that because of this whole change in business models because of technology, there is a lot of flux in business models across different sectors. And some smaller companies will obviously be able to ride that change better than incumbents. The second is, I think, due to multiple reasons like cost and geopolitics, we are seeing a kind of renaissance of Indian manufacturing, and obviously getting there is prospect of getting a lot of market share in manufacturing from China. Now, again, here the issue is there is very little of manufacturing stocks in the top 100, 150 stocks because a lot of these industries have struggled over last 20, 25 years. Because of which the scale of Indian manufacturing today is actually very small compared to the size of the economy. Now, if we are able to, as a country, execute on this big mega trend, then we will again see because manufacturing is also a very diverse sector. You have auto, you have textiles, you have chemicals, you have pharma. So, if this whole mega trend, we, as a country, we are able to capitalize and it plays out as it should, then I think again you will see a lot of export driven models which can scale up quite fast. And again, a lot of these companies will start as small companies. Thirdly, overall, if again India has been through a tough patch for 7 8 years, and if overall economy for next few years does well, generally we have seen that both financial and operating leverage is higher in mid caps. So, whether you talk of cyclical segments like real estate, cement, utilities, a lot of these spaces, many mid-cap stocks are there in that. So, if the economy does well, these stocks can do well. So, overall, I think from a medium to long-term perspective, you have these big trends. So because of valuations or some macro disturbance, you can get some corrections. But overall, I think the mid cap space is quite exciting.
Okay, so what about the valuation? How comfortable are you with the valuation currently in the mid cap space?
So from a very near-term perspective, obviously, since the April 2020 bottom, obviously, mid caps have massively outperformed large caps. On a 3-5 year basis, both are roughly equal.
Hmm.
So there, as I said, because it has run up quite fast, you could get some short-term corrections. But if you are a patient investor on a 3-5 year basis, I still think that mid caps may marginally outperform large caps.
Okay. So what kind of allocation should distributors look at, in particularly in mid cap funds? And should they recommend a lump sum, or is it better to go take staggered approach? What is your view on that?
So the first question about what kind of allocation, I think there should be a very reasonable allocation because but it depends on the investor. See, basically, if the investor does not have any liquidity issues
Hmm.
and is ready to stay for 5-10 years. So if you look at Nippon Growth itself, since inception, it has obviously significantly beaten the index. And I think a lot of good mid-cap funds, it's not only our fund. I think across the universe, what we have seen is on a 10, 15, 20-year basis, a lot of the mid-cap returns have exceeded most of the funds. So I think because ultimately we have to recognize that we are thankfully sitting in one of the fastest growing economies of the world, among the large economies. And in that scenario, you will always have new business models. You will have very underpenetrated industries, which as the country prospers, those underpenetration leads to high growth. So I think over long term, a significant allocation should be toward mid cap. Coming to more tactical thing, today I think staggered is better than lump sum purely because we clearly have been through a massive bull run in mid and small caps. And while I do, as I said, see very positive long term trends in the near term, also because you've seen a rise in crude price, which is not so great for the Indian economy. Interest rates, both global and domestic, are starting to move up. So near term, maybe given the sharp outperformance, some staggered way of investing is better.
Okay. So Manish, over the last 3 to 5 years, we have seen many mid-cap funds delivering muted returns. So why it happened, and what can investors expect from mid-cap funds going forward?
Well, I don't quite agree because I think the good mid-cap funds on 3 years are, including Nippon Growth, they have beaten both BSC 100, BSC 500, and BSC mid-cap index. So on 5 year, it is a bit less because that phase between 2018 Jan to 2020 March bottom, when Corona hit, that phase of about 2 odd years, it was a very narrow market. The Indian economy was going through a lot of challenges. Globally, we had the US China trade war, and even the global economy was struggling. So if you average it out either over 10 years or 3 years, you can see that mid cap funds have done quite well. And I think the mid cap funds have a good mix of some large caps, most of it is mid cap, and some small cap. So there's a lot of flexibility in terms of how to build the portfolio across different market caps. So I'm quite confident that on a medium to long term basis, mid cap funds will continue to deliver alpha for investors.
So, Manish, Nippon India Growth Fund has completed 26 years of wealth creation now. So, in fact, the NAV has moved from rupees 10 to now over 2000 rupees. So, tell us about its journey so far and what are the three key memories that you want to share with our audience?
So, see, this fund has obviously morphed in terms of its uh, objectives and philosophy over time. So, one of the biggest changes was when the SEBI categorization happened, because till that point we were running it more balanced between large cap, mid cap, and small cap.
Mm.
So, very roughly, just before the SEBI categorization happened, we had almost one third each in large cap, mid cap, small cap. And then it was converted into a mid cap fund. So the good part is, I think over last 20-25 years, as a house, we have had a great legacy, especially in mid and small cap research. So as an organization, I think we have probably invested the highest amount in mid and small cap research. And over time, even today, if you see the number of stocks we cover, is probably among the highest on the street. We cover more than 530 stocks. And if you see the size of our small cap fund, if you see the size of our mid cap fund growth, they are among the biggest in the industry. So we clearly have had a legacy of investing a lot in mid and small cap research. The experience level of our analyst team is, again, I think one of the highest. And also, we have tried to build a lot of scalability in the way we run these funds, which is why we have so many stocks under coverage. Um, so the good part is, if you see Nippon growth over last 3-4 years, we have basically been able to ride the different cycles quite well. So if I have to break it into two or three different cycles,
Mm.
since 2018, the reflation trade, which started from 2016, was coming to an end. And both the domestic and global economy, suddenly from having an optimistic bias because of the trade war, because of the PNB bank scam, because of the NBFC crisis, from 2018, the outlook started darkening both for the domestic and global economy. And I remember that around the time SEBI categorization was happening, and we were able to reduce our small cap and mid cap exposures, and also convert the cyclical exposures into more defensive exposures just in time, so that in that whole downturn of 2018 to, let's say, 2019 mid, we outperformed benchmark and peers. And then as the valuation of the cyclicals became cheaper, then we had a phase from 2019 mid to Feb 2020, when global economy started to recover, Indian economy also started to recover. And we had added cyclicals through this phase, and we were starting to do well in Jan and Feb 2020. Unfortunately, when Corona hit us, both these cyclical exposures and by chance, we also had a lot of outdoor consumption between retailers and multiplexes and beverages, etc. So we got hit by Corona in terms of performance quite a lot in March 2020. But the good part is, if I see the third phase, which is basically the whole recovery phase from April 2020 to today, even within that, there'll be mini cycles, right? So first, pharma did well, then retail banks and IT did well, and then when the vaccination news came in, then some cyclical stocks like commercial vehicles and banks started doing well. And then we had a second wave. Good part is we've been able to ride the different mini cycles in this big bullish wave reasonably well, I think. And we're just hoping that that phase we are able to do that till maybe the next global recession comes, whenever it does.
Okay. So, Manish, the fund is well diversified across 80 stocks. So, why has the fund held so many stocks?
So if you see, our size is roughly about 12, 13,000 crores. And by nature, more than 65% has to be mid cap. So we end up with about 75, 80% as mid and small cap, because you will have 10, 15%
Mm,
small cap as well. So we are talking of, roughly about 100 crore plus average position. And therefore, I think it's good. See, I generally, as a philosophy, I believe that we should have liquidity and risk management as a very prime objective,
mm,
right? Because ultimately the macro is very unpredictable. You could have good things happening, or as we saw with corona, you could have bad things happening. So we need to be flexible in terms of managing a portfolio, so that our portfolio, a lot of it is bottom up, obviously, in terms of having a rigorous process to have a fair value of a stock. But also sometimes, crude goes to zero, sometimes crude goes to 85. So different things happen in macro. And I think what we have been very conscious about is to have this liquidity, so that we are able to, at the margin, change the portfolio. So the way we think about it is like this, that the top 40 stocks are roughly about 75 to 80% of the portfolio. And those are our core holdings, those are our high conviction bottom up bets. It's the last 30, 40 stocks we use to, either it's a core position being sold because the valuation has got too high,
mm,
or a core position being built up where we find the stock attractive, or there are some holdings to reflect the macro positioning of that, of the fund at that point in time. Because there is global growth, domestic growth, commodities. Obviously, we've seen that these things change a lot. So our portfolio has to, keep up with this kind of macro developments. So we think it's important to have a bit of flexibility with the tail.
mm. Okay. So, Manish, so a lot of mid-cap funds have held at least 74% of their portfolio in mid-cap stocks, but Nippon India is close to 65%. So, why is that? What is the reason for this
So
strategy?
one is, I think, and just goes back to what I was talking about, that maybe because we have a bigger investment in small cap research. So if you take our mid cap plus small cap, it typically be about 80%, which is where I think most of the peers will also be there.
Mm,
Um, but we do find a lot of opportunities in small cap, where we find either a very unique business model, or very high growth company, or very deep value also sometimes.
mm,
And therefore, we probably will have a higher amount of small cap, where we think some multi-baggers are possible. So I think that is the difference.
okay. So while the fund has invested across different sectors, but financial services and FMCG are the top three holdings in terms of asset allocation. So why are you bullish on these sectors?
So financial services, first of all, there are many segments within that. So if you see, a lot of our holdings are not I mean, we obviously have banks and NBFCs.
Mm,
We also have life insurance, general insurance, broking, AMC. So we think that this non-lending financials,
mm,
which is all these insurance and broking and AMCs,
mm,
they are very underpenetrated in India. We think that financialization of the economy, which is also led by formalization of the economy, because obviously the more formal institutions or households who are among the top 10-15% have more formal savings. Those get channelized into all these products. So we think that there is a huge underpenetration, and we think generally these products grow faster than nominal GDP. So one of the key things when we build the portfolio is to find sectors or segments which, from a 5-10 year basis, we think will grow faster than nominal GDP. And we definitely think that whether it is insurance or capital markets, savings, all these financial savings will grow much faster than the nominal GDP, because as people become richer,
mm.
the proportion of money which goes into financial savings or insurance becomes higher and higher. So that is the reasons why we are positive of financials. Um, FMCG, there is both structural and tactical components. Structurally, of course, FMCG has one of the best quality companies segments, in the sense that the return on equity is high, it's branded, B2C kind of business, very stable business. But also from a more tactical viewpoint, some of these FMCG stocks we think are good opening up trades, like beverages, for example. As people travel, as people have events like marriages or tourism, the consumption of beverages will obviously be much higher. So we think over the next few quarters, as the crisis of virus fades away, people get more confident to go outdoors. We think that some of these FMCG segment stocks are good plays on that recovery.
So great. So with that, we have come to an end to this interesting session. Thank you so much, Manish, for your time and valuable inputs.
Thank you. Thanks for having me.
Yeah. Finally, thank each one of you for being such a wonderful audience. Happy Diwali to all of you.